All right, let's dive right into this explainer. We are tracking the absolutely epic 14-year journey of Coinbase. We're looking at an evolution from a scrappy 2012 startup pitch all the way into a foundational powerhouse of global financial infrastructure by 2026. Now, if you follow finance at all, you know this has not been a smooth ride. But understanding this evolution is absolutely crucial for grasping where your money and really the entire financial ecosystem is heading. To set the stage here, just listen to this incredibly bold prediction by Coinbase co-founder Fred Ehrsam. Everything will be tokenized and connected by blockchain one day. That instantly sets the stakes for the revolution in finance we're about to explore. You see, it wasn't just about creating a place to buy some new digital coin. It was a fundamental thesis about the future of how value literally moves across the globe. So, here's our roadmap for today. First, the origins of a crypto giant. 2, the iTunes of Bitcoin. 3, going public and branching out. 4, battling the SEC. And finally, 5, the 2026 infrastructure powerhouse. Let's start with Section 1, Origins of a Crypto Giant. To really grasp the sheer scale of their transformation, we've got to go back to the very beginning. And like so many modern tech legends, this didn't start in some fancy boardroom. It started when two strangers met on a Reddit message board back in 2012, creating just this perfect storm of combined expertise. On one side, you have Brian Armstrong. His background? Building international fraud prevention systems at Airbnb, which was a fast-growing company dealing with massive international payment complexities. On the other side, Fred Ehrsam. He was a Goldman Sachs foreign exchange trader, dealing with global currencies. But, and here's the kicker, he also spent 3,000 hours farming gold in the video game World of Warcraft. And, this wasn't just a hobby. It gave him a deep, intuitive understanding of digital, tokenized economies. So when Armstrong's serious fraud prevention mechanics collided with Ehrsam's grasp of digital value, the foundation for Coinbase was officially laid. Moving on to Section 2, the iTunes of Bitcoin. Think back to 2012. Buying Bitcoin was honestly incredibly intimidating. You were dealing with these scary 34-digit hashes and open-source desktop clients that completely terrified non-technical users. But, pulled straight from their 2012 Y Combinator seed deck, their mission was incredibly clear. Coinbase is to Bitcoin what iTunes was to the MP3. They wanted to build a hosted wallet that made participating in this totally new digital currency as easy and intuitive as just downloading a song. And look at their early traction from that exact same pitch deck. They were seeing 20% daily increases in signups in August 2012. But notice the transaction volume, just $65,000 in their first 5 weeks. Just keep that tiny number in the back of your mind, right? Because comparing these humble beginnings to the billions they process today really captures the explosive growth of the entire industry. They found their product market fit by just making things simple. Section 3, going public and branching out. Fast forward a decade, and that simple little wallet had ballooned into an absolute empire, leading to a massive NASDAQ public listing in 2021. But even as the company reached these traditional finance heights, the founders' individual ambitions were already expanding. Just following Fred Ehrsam's timeline here, he stepped back from day-to-day operations and in 2018 co-founded Paradigm, raising a massive $2.5 billion venture capital fund to back crypto startups. Then in 2024, he co-founded Nudge, shifting his focus entirely to neurotechnology, specifically non-invasive ultrasound headsets designed to actually change brain states. And by 2026, he was appointed to the President's Council of Advisors on Science and Technology, or PCAST, by the Trump administration. It really shows this continuous drive to find the next major frontier, whether that's digital money, decentralized finance, or, human cognition itself. Which brings us to Section 4, battling the SEC. Now, while Ehrsam was out exploring those wild new frontiers, back at home base, Coinbase was fighting an existential regulatory war against the Securities and Exchange Commission that would test their entire business model. When the SEC sued them in June 2023 for allegedly operating as an unregistered exchange, broker, and clearing agency, Coinbase fought back using a very specific legal defense: equitable estoppel. Now, scratch the legalese for a second. Simply put, it means you cannot punish someone if your own previous actions or words made them believe they were following the rules, causing them to rely on those actions to their own detriment. And here is exactly why Coinbase used that defense. On one hand, back in April 2021, the SEC actually declared Coinbase's IPO filing effective. They allowed them to trade publicly without citing their core business as illegal. Yet, on the other hand, in June 2023, the SEC filed a lawsuit claiming Coinbase had been operating illegally since 2019. So the crucial point Coinbase impartially argued in court was that the government was giving major mixed signals. They were basically saying, hey, you approved our public listing based on this business model, but now you're suing us for operating that exact same model. Ultimately, the resolution to this huge legal battle didn't actually come from a final judge's ruling on equitable estoppel, but rather from a major shift in Washington. Former SEC Chair Gary Gensler faced heavy criticism from the House committee regarding his mixed guidance, and he ended up departing the agency early. Then, in April 2025, Paul Atkins, who is known as a crypto industry ally advocating for clearer rules, was sworn in as the new SEC chairman. And right before that, in February 2025, a joint stipulation was filed dismissing the case against Coinbase entirely. This administration shift effectively cleared the regulatory cloud that had been heavily hanging over the company.
Section 5. The 2026 Infrastructure Powerhouse.
So, having survived literal crypto winters and massive regulatory hurdles, Coinbase emerged in 2026 fundamentally transformed into what analysts call a subscription and services moat. They were no longer just relying on retail trading fees. No way. They're now earning custodial revenue by safely storing assets for Wall Street giants like BlackRock for their exchange-traded funds, or ETFs, which are just investment funds that track the price of an asset. They also earn interest on reserves for the USDC digital stablecoin, which is pegged to the US dollar. They collect staking fees. And crucially, they collect transaction fees from their own proprietary blockchain network, a Layer 2 system designed for faster, cheaper processing called the Base Network. They've deeply, fundamentally embedded themselves right into the plumbing of global institutional finance. And as a result of all that transition, $11.3 billion. That is their cash war chest as of early 2026. Remember that humble 65 grand in volume from their 2012 pitch deck? Yeah, now they are sitting on over $11 billion in cash and equivalents. This gives them absolutely massive leverage for acquisitions and ensures they can weather pretty much any market volatility thrown their way. But listen, dominance in 2026 doesn't mean they're just coasting. In fact, they're fighting a really fierce two-front war. On one side, you have nimble crypto-native rivals like decentralized exchanges such as Uniswap and global giants like Binance. On the exact opposite side, traditional finance is fighting back hard, with Robinhood offering zero-fee crypto trading and SoFi bringing chartered banking into the mix. So to counter this, Coinbase's master strategy in 2026 is becoming the everything app, pulling traditional stocks, commodities, and prediction markets directly into their interface to challenge traditional brokerages head-on. Which brings us to the ultimate question. As Coinbase blurs the lines between decentralized crypto and tokenized real-world assets into just one single unified app, we really have to ask ourselves, will Coinbase actually achieve its vision and become the true Google of finance, or is traditional finance going to strike back and reclaim the future? It is a massive battle that will absolutely define how you and I interact with our money for the next decade. Thanks for joining me in this explainer, and definitely stay curious.